From Estee Lauder to Apple. Incorporated, big companies say China's COVID restrictions are hitting business. Beijing, several international corporations warned in the last week the drag from China's COVID controls will hit their entire business. Now the latest lockdown in Shanghai has lasted for more than a month with only slight progress toward resuming full production, while Beijing has temporarily closed some service businesses to control a recent spike in COVID cases. Starbucks said Tuesday same-store sales in China fell by 23% in the quarter ended April 3 from the same quarter last year. Conditions in China are such that we have virtually no ability to predict our performance in China in the back half of the year, interim CEO Howard Schultz said on an earnings call, noting additional uncertainty from inflation and the company's investment plans. Despite nearly all its final assembly plans in Shanghai restarting production, Apple said the lockdowns would likely hit sales in the current quarter by $4 billion to $8 billion, substantially more than in the last quarter. COVID is difficult to predict, CEO Tim Cook said after describing those estimated costs, according to an earnings call transcript from Street Account. DuPont, which sells multi-industry specialty products such as adhesives and construction materials, announced second quarter guidance Tuesday below analysts' expectations. Two DuPont sites in China went into full lockdown mode in March and are expected to be fully reopened by mid-May, Koch said. She also said that within the electronics business, inability to get raw materials from China forced some factories to run at lower rates, affecting margin in the second quarter. Despite a strong fiscal third quarter, makeup company Estee Lauder cut its full-year outlook due to COVID controls in China and inflation. The resurgence of COVID-19 cases in many Chinese provinces led to restrictions late in the fiscal 2022 third quarter to prevent further spread of the virus, the company said in a release Tuesday. Yum China said Tuesday that same-store sales plunged by 20% year-on-year in March, and likely maintained the same pace of decline in April. The company said it still intended to achieve its full-year target of 1,000 to 1,200 net new store openings. For the first quarter, roughly half of MSCI China mainland stocks, excluding financials, missed first-quarter earnings expectations, with only about a quarter beating expectations, Morgan Stanley analysts said in a note Tuesday. The quarterly results were the worst since the first quarter of 2020, the analysts said. Downward earnings revisions are likely to continue for another 2 to 4 weeks, the Morgan Stanley report said, noting all of the mainland traded stocks known as A shares have all reported first quarter results as of April 30th. The latest sentiment score points to a sharp drop in earnings ahead, although that is not Bank of America's base case, the report said. Several major corporate earnings are still ahead, including Disney and Toyota Motors results due out next Wednesday local time. Global business and financial news, stock quotes, and market data and analysis.